Hi, this is David Zai, Mortgage Guy. Today we are going to dive into a topic that is crucial to anyone stepping into the world of home ownership, especially on any type of loan, navigating medical collections. Have you ever found yourself puzzled by how medical debts can make or break your loan approval process? You're not alone. Today, we're going to guide you through the maze of medical collections and how they affect your journey to owning your dream home. So, medical collections can be daunting in securing a home loan, but with the right knowledge and my strategies, it's a hurdle that you can overcome. So, whether these are collections from insurance disputes or unforeseen medical emergencies, they have the potential to lower your credit score and hinder your approval process. First, let's break down what a medical collection is and how it can end up on your credit report. There's a couple things that we really need to understand, okay? We have to understand the difference between a medical collection and a medical bill that you're paying on and a judgment. First of all, when you have a medical bill and you make a payment arrangement on it and you share it with the underwriter or you share it with a loan officer, we're going to count that medical payment against you. However, if you don't share it with us and we find it on your bank statements or credit report, we're going to start asking you about it and we're going to want to see how long you have left on that medical payment, and we're going to count that against your debt to income ratio. So here's the impact. Let's just say you make $10,000 a month pre-tax, $120,000 a year. However, we're qualifying you for a $4,500 mortgage payment. We add some additional debts in there. Let's just say you have a couple credit cards and that's $4,700 now. So that's 47% debt to income ratio. What happens if we have a $1,000 medical collection? Well, at that point, the underwriter's going to look at it and we're going to say, well, you have less than 13 months on it, so you have 12 months left. Do we have to count that against you? If we count it against you, we add that 1,000 onto the 4,700. Now you have 57% debt to income ratio. That's totally going to kill a conventional loan on a back end ratio. Now, with that being said, it's really important that you figure out what it is that you owe and utilize your money better. Do we put less down payment down so that we can cover this collection, or can we possibly negotiate it down so it's a lesser payment and the underwriter's willing to sign off on it? But here's the real skinny on all of this is that medical collections really don't have to be counted against you. And that's why a medical collection may actually be more favorable than you calling the creditor and paying that bill off. So let's use this as an example. We talked about the medical bill and what that payment is. What if it was a medical collection? If it shows up on your credit report, first of all, that is something that can be totally taken off of your credit report. And stay tuned and watch the video a little longer and I'll show you how to do that. However, that medical bill payment and the debt does not have to be counted against you because it is not something that is recognized by any agency except for Freddie Mac. So if you're getting a conventional loan and you're talking to your loan officer, it's really important that you figure out whether they're going to run it through the automated underwriting system with Fannie Mae, which is DU, desktop underwriting, or if they're going to go with Freddie Mac, which is Loan Prospector. At that point, we can see everything that's on your credit report. We can qualify you based on your debt to income ratio, and those medical debts can kind of be pushed out if they're collections. If they're medical bills that you're paying on, they may have to be counted depending on investor overlays. This is really important too. Investor overlays is where you have standard guidelines and then you have the halo that kind of goes around those guidelines. And those are only going to be specific to direct lenders and banks that have their own lending products. And even on broker side, there are going to be some investor overlays, but because of a company like ourselves, where we have over 250 different investors, we can kind of sort through those and filter out the ones that have the overlays that would affect you and go strictly to the investors that do not have overlays. So it's really important to work with a mortgage broker. Now, the impact on the loan is that the lender is definitely going to scrutinize your credit report, and we're looking at payment history. And this truly could mean the difference between getting an approval and not getting an approval. Because if you're getting a loan such as a conventional loan, if we don't get an automated approval, you don't get approved. The loan gets denied because it's now a refer and there are no manual underwrites on conventional loans. However, I have heard that there are investors out there that do have manual underwrites on conventional loans, but a really good fallback is an FHA loan because they can manually underwrite FHA loans. But what is manual underwrite? Manual underwrite is where we've run your complete loan with all your income, assets, and liabilities through the automated underwriting system, and it is not coming back with an approval. It's coming back with a refer. That means an underwriter has to go in and manually approve the loan. Now, to prevent that, that's why we're talking about medical collections. If you see those medical collections on your credit report, you can dispute those, and I would take the legal route to dispute those and get those taken off because they really shouldn't be on there and will really really go in and dive deep on that a little further in the video. Believe it or not all medical collections weigh the same in the eyes of lenders. So let's explore which ones could impact your loan application the most. So from a lender's perspective, it's basically when we look at your credit, we're looking at your history, right? We're looking at how you handle your finances, if you pay your bills on time, how late you are. And with the changes in credit coming up with the new versions of the credit bureau, it's going to impact it even more. Because in the past, we've only looked at trended data on mortgages, right? So we're looking at your payment history every single month to see what the usage history is, what the monthly payments are, so on and so forth when it comes to us making a decision. Well, there's going to be a change pretty soon where the credit cards are also going to be looked at that way too. And same thing with installment loans. So we're looking at the trended data. So we're like, okay, this guy's making the payment on the 29th day of every single month. So he's not late, but he's pretty late, right? That definitely does make an impact. And that's the difference between underwriter choosing to say, yes, this was a medical emergency, so we can overlook this, or not. Transparency with your lender is absolutely crucial. Make sure you have good letters of explanation written up to say, this is what happened, this is why it happened, and this is why it will not happen again. That is the true key to writing a letter of explanation. Don't just write, oh yeah, we were late because my daughter didn't make her car payment. I literally had that happen recently. There was one late on the borrower's credit report, and there were 3 lates from a car payment, all within the same time period. So underwriter was like, no, we're not going to approve this, no go. Now, what if I told you there was a way to potentially get rid of the medical collections off of your credit report faster? So let's talk about how to change this. First of all, there are 2 rules you have to know. Number 1 is the Fair Credit Reporting Act. That is something that was put into place to accurately and fairly report everything that's on a credit report. So if there's any inconsistencies, you can dispute it and get it taken off. However, it's also really good to understand HIPAA, which is the Healthcare Insurance Portability and Accountability Act. This law was kind of put in place so that you can dispute with fair credit reporting and then potentially remove any unjust or incorrect medical collections from your credit report. What happens when you remove something like that? So let's just say your credit is a box, and we're just going to use this playing card right here as a box. This is your credit right here. This box is filled with flowers. However, you have a rotten egg in there. What happens with that rotten egg that's been sitting there for 4 months? It starts getting really smelly in there, right? Even if you have all these fragrant flowers around, it's going to get smelly. However, if we take that rotten egg out, it removes all the smell. So we have to think about it from your credit standpoint. When we remove that rotten egg off of your credit, you're going to actually eliminate all the lates as well. And that truly can flip that refer eligible to an approve eligible. So if you can't get it taken off or taken completely off of your credit, I would try at least 3 times. You can give us a call. We've been really successful in assisting clients in removing collections, whether they be medical or not. But we also, if you have a lot of collections, then we actually have partnered up with a really good credit repair company, and they can certainly take you to the finish line. And I've seen customers go from like a 600 credit score all the way to 700. So this kind of leads me into the story. I've truly spent my life knowing that it's really important to always have good credit. And my mom always paid her bills on time. Like, my mom has never in the last 20 years had a credit score lower than 800. Everything's always paid on time. Everything's always early, as a matter of fact. However, there was a time that she went to a doctor. She had full insurance coverage. She paid for her deductible. Everything was paid for. However, it wasn't registered right. So she had a medical collection, and going through and fighting with the insurance company, they were not accepting the claim. And this was 3 years down the line. She got an alert. She had something in the mail. She's like, David, she doesn't speak a lot of English, so she brings everything to my sister and I. We read over the letter. We're like, okay, let me go ahead and check your credit right away. Well, we called my credit person, and this is really new into this whole credit repair thing, but this was truly the gateway to understanding medical debt and medical collections and other debts as well. But Allison did a really good job, right? She talked to us. She held our hand throughout the process. She wrote the letter to the medical collection company as well as the creditor, and was like, hey, you cannot have this on the credit report because this is a violation of FCRA, which is Fair Credit Reporting Act, and HIPAA. Literally within 40 days, it was totally off the credit report. Her credit score went from that low 680 mark all the way back up to 800 again. Up next, we're going to discover the negotiation strategies with collection agencies that not only clear your medical debt, but also improve your standing with the lenders. So if you're not able to get it taken off, the next step would be to negotiate for removal. When you negotiate for removal, you're basically calling the credit company and you're like, hey, I just noticed that I have this collection on my credit report. I've always made the payments on time, and I'd like to speak to a level 2 supervisor. Talk to the supervisor. They're the decision makers. At that point, you say, hey, I'm looking at my credit credit report, I see this collection on here, and I'd like to do the right thing. If you don't believe me, I've always paid everything on time. However, I want to ask you a favor. If I paid this, can you remove this off the credit report? You could even throw in there, I'm in the final stages of buying a house, and this is literally the only thing that's preventing me from getting a better interest rate or closing on a home. I need you to get this taken off my credit report. And typically, when you have those negotiation strategies and you're super nice about it, the person on the other side of the line may actually work with you to do a paid for deletion. Paying full price is never cool though. So I always try to negotiate, right? So settle for deletion, right? We settle that debt. If it's $1,000 debt, we try to settle it for 10%, 20%. So we offer them $100, $200, $300, and we kind of do that negotiation thing until they're willing to negotiate for deletion. If you can't get a negotiation for deletion, it's totally fine if you just get it, completely settled off, and then afterwards you can go in and dispute it and get it taken off. If none of these factors work, that last strategy of just paying for it with some sort of settlement is going to be the golden ticket. At that point, you remove the rotten egg. Yes, there's still going to be a lingering smell because they haven't removed all the payment history out. However, with that being said, having that gone and having that time away may help. If you can get it disputed off, absolutely. Immediately, you go from that manual downgrade to an approval. That's totally worth the time. And if you, like I said, I'm offering this again. If you need the assistance, feel free to reach out, give us a call, click the link below. Navigating medical collections on the path to securing a home loan may seem overwhelming, but armed with the right knowledge and strategies, which we provided you with in this video, you can certainly turn those potential roadblocks into just another step to your path of home ownership. If you're facing challenges with medical collections and need guidance, my team is definitely here to serve you. So don't hesitate to give us a call. We're here to support you on your journey to financial freedom and home ownership. Remember, every challenge is an opportunity in disguise. David Zion Mortgage Guy, I'm out.